Microphone check, please. All right, good evening, guys. Ken at Tortoise Capital, Nightly Strategy Podcast for October 14th, 2022. I want to start with the sniper trade of the day. For those of you that listened last night, we talked about the potential of today being a major movement day, large directional trade. It was in a compound critical state. We said if it started to roll over, that yesterday could very well be a dead cat bounce. In other words, a large range up day in a bear volatile market, and that the intraday sell-off could be extraordinary. So we're just going to take a look at a standard minimum manageable risk box of $1.25 in the S&P, and this was yesterday's close. And we see a gap up, an excursion to the upside. If you had played the OR5 breakout, you would have scratched. And if you play the standard entry on the break of the dragon, you get a short here with a risk box to the top of the dragon. You get a second position at the 2R battle drill. So standard risk, standard entries. This thing runs down all day, and if you take the standard PSAR exit, you get a 5R trade on the first position. You get a 3R trade on the second position. If you only play one position, it's a 5R, 8R if you use both of those. So standard work, and that's not even trying hard on the 5-minute. 3-minute, it's even better, and you can engineer a better entry given this sharp reversal here. But the PSAR is your friend. It's what keeps a limit on all of this stuff. If you had gotten out here, you should have gotten back in there, and you still would have captured most of that move. So the Nightly Strategy Podcast, once again, paying off. We'll start with the let's start with the 30-minute chart so we can take a look at the tactics of the day. Even the 30-minute chart offered some potentials today for the very slow day traders among us. Here was the gap up, rolled over immediately. If you play the RLXD, you get an entry here, and you cover somewhere by the end of the day. You just get one move, and the dragon keeps you in the whole time. So the 30-minute chart has a lot to say. So yesterday's big move up gave back half of it, and it came right back into the support levels around 357, as we talked about last night. Routine work. The daily chart and the 30-day look back, this is our 1-day range here. That's this move. Here's our 5-day look back with the high and the low. Here's the 10-day look back. There's our 10-day high. Yesterday's always going to be the low. Here's our 20-day look back and our 30-day look back with the 30-day high, the 10-day low, and closing in the bottom portion of this entire operation. So not looking good at all. And all weekend for people to think about it for a big gap down on Monday and leading to a morning hook, quite possibly. Here's the 150-day look back. There's our 30. There's our 20, 10, and 5. And we're stuck down here in the bottom of this cluster, and that's Godzilla territory here. Large 5-day range, horrible sell-offs on every dimension. Godzilla territory, and that's what gives you this kind of large intraday range that is so very, very tradable. Next up, we'll look at the sectors. Let's see. So today the S&P disappointing 2.28. The Russell was worse at 2.68. The Qs were worst of all at 3% off. Emerging markets only 1.5. The Dow only 1.25. And even Treasuries though minus 0.83, closing well below 100 now. No safe spaces, none. Let's take a look at the things that did better. Again, the S&P, the Aussie dollar, blended commodities, consumer staples, the defensive plays, still off 1.8. Lumber 1.7, the other lumber 1%. Finance 1.68, Bitcoin 1.25, Mexico 1.2, Ethereum minus 0.95, agriculture 0.59, and the only symbol in the whole stack, the only sector that was in the green, commercial real estate, which was flat, and then the VIX 2.24. All of the individual companies are all worse than the market today, with the exception of Intel, which was off 1.9. So that's faint praise indeed. What was worse than the S&P? Just about everything. Just about everything. S&P off 2.3. So you had real estate, biotech, tech, and Brazil down to 3%. And you have oil, lithium, materials, Arc Genomics, energy, consumer discretionary, the FANGs, precious metals down to 3.8. Uranium, clean energy, 4.2. Oil exploration, 5%. Marijuana, 5%. Arc innovation, 5.7. Tesla getting smashed for another 7.5. And then these are all individual companies now. Rivian, 11.5. Squarespace, 8.4. Coinbase, 8.2. Robinhood, 6.9. There's our metal. Alcoa, 6%. Cliff Natural Resources, 5.7. And U.S. Steel, 5%. So all of the metals were down and were worse than their sector, XLB. So more pain and suffering for them next week. NVIDIA, there's a chip. Texas Instruments, there's a chip. And Intel was the best of the breed. Intel was the best semiconductor, but down 2%, and then Texas Instruments 3.9, and NVIDIA 6%. Wow. Devon Energy 5.8, PayPal 4.25, Apple 3.2, Microsoft 2.4. So such a variety of market leaders getting smashed. That was a complete shell shock and ritual assassination today, which sets up painful selling on Monday early and the possibility of a big gap and then a sharp reversal in the same way that we saw that on Thursday. So go ahead and look at yesterday's big gap down and rocket ship ride to the top. That's one of the scenarios for Monday. And then today's another scenario for Monday. Big gap up and then harsh rollover. Both of those are equally likely. The least probable would be routine open and no movement, just a sideways quiet. That would be the most surprising. That won't cost us much money if that happens, if you start working for the trade on Monday. All right, let's take a look at the, I already saw a sniper trade of the day. Let's take a look at the at the traders today before we get into the weekend reports? Agnieszka with some beautiful work on her three trades today. This is taking a page out of Constantine's book, the XAU USD pair. She starts in the market here. Could have had this collapsing dragon. Could have had this one. Could have had this one. But she does take that one and takes the exit here. I want to point out a 1, 2, 3 exit would be here. So this would be 1, 2, 3, and you take that exit right there. And that's also the skin of the dragon. So both of those would add, either one of those would probably add another plus 0.3. But pretty good work. This is later, and she has a potential collapsing dragon here and a PSAR flip right there. So that was a potential trade. Now, if you do take this trade, now there's a 1, swing low. This one closed with a higher low, so that makes this a bar 2, and then it makes this a bar 1. Like, you don't know that's a bar 1 until this one closes. Until the candle 2 closes, you don't know that it's not going to come down and make a new low. So you have to wait for the second candle to close and then check the uptick and make sure that it's a higher low. Then that's candle 1 and candle 2, and then you check this one. If this takes out the high of bar 2 without making a new low, then this is bar 3, and then that is a live 1, 2, 3 exit right there. So if she had taken this one and then taken the 1, 2, 3, she'd have had that trade. Now, by the same token, when you have such an extraordinary excursion well past Z3, and then you get a favorable excursion here, and then it is already coming back up, opens and starts moving up, I take it right there and just be done with it. Just take it instead of waiting for the 1, 2, 3. And that saves you a full R or half an R. So this one comes just to the edge of the dragon and then rolls over. When you have this formation, a harsh sell-off, a recovery which rolls over at the dragon, then it comes out of the dragon, you take that as an RLXD and smash it to the downside, especially in a bearish volatile market. And then this is your RL10 reversal, and then this becomes a collapsing dragon. She does get it here, which is okay. Agnieszka, check your chart setup, because it looks like your RL10 is using price and not the RL10 for the PSAR, because your this PSAR should be down here with the RL10. But she does get this short on the R10 PSAR break. She hangs with it. There was a second entry possible here. If you take that, or if you're just leaving that one on, when you come down here and you get this, on this maybe touch of the dragon or penetration of the dragon, I like to take either one of those, but that's still pretty good. And that gives you a solid 1R. Over here, where you're out of the market, this is where that next trade comes with a risk box like that, and then you get all of this move too. But that's pretty good work there. Her third trade is on the euro-dollar pair, again on 5-minute charts. And this is where the CD could have been had. And then again, you get this and it starts reversing. Just take it, get paid. And then when it breaks through the dragon right here or right here, you could take that as maybe as a slightly better entry. But any one of those three would give you a good one. And then when it breaks below this, that's an entry. But this is still pretty good. You hung with it pretty good. Now, when you get down here, I'd like to see you just get out here and just take it because you have that much of a move off the bottom. Just go ahead and take it and lock in the gains of your plus 1R. But still, that's pretty good. This was a PSAR flip and an SSC that would have paid off nicely. Then this one is a trade that would also pay off. And now the big trade of the day, yikes, SSC crushing it for 1, 2, 3, 4. Ooh, love me some Forex. But we'll take 3.5R on any day. Good work. All right, Tim. I love this. You're front running the collapsing dragon a little bit. When this thing gets down and maybe comes back to the dragon, maybe a scratch, but I understand this, then this should be a stop and reverse, and then that should pay you, and you should collect that move. I understand this one, but as soon as that fails, take it, get short right here, scratch it, and then this gets a little choppy, but we'd have saved a couple R inside this. In the chat room, asked for some insights about trading off the early exit versus letting it ride. These are my thoughts on that. There are 3 standard mechanical exits that I talk about in this section. The first one, just trail with 1R and leave it alone. At 2R, lock in 1.5 and then pick up the 1R trail again. And after 3R, just use the PSAR when it gets touched by price. So just essentially trail 1R and leave it alone. Stop thinking about it. 2. Use the Wu-Wei exit, which is a mechanical exit, well documented, and now you don't have to overthink it. You just execute it and then evaluate it. And finally, just use the PSAR, set it and forget it, and then set the position size so that if it hits the PSAR exit right away, it's a 0.2 loss, and now stop thinking about it. Just let it do what it does, because it's in the noise until it comes back and hits the PSAR. And that'll eliminate all of this cognitive dissonance where you're suffering. So pick any one of those 3 and see what they do to your performance this day and this week. Actually, do a study and compare the advantages of all 3 systems of mechanical exiting, and then see what the study says, and then how do the conclusions make you feel. And don't ask me to do that work and then give you a suggestion for what I think might work for you, because I don't know. That's the work you need to do. Now, I understand asking for advice and insights, but the work to do is this. See the study, do the work, make a professional judgment, and align that with your beliefs and your feelings. These are all 3 mechanical approaches that we've discussed in the chat room, and there's no shortcut for putting the effort into the management of the exit rules. And then follow through with it. If you're having trouble following your rules, it's because you're trading at too high a level of risk and you're worried about the negative side of the trade. That means you're trading with too large of a size. You have to set the rule and let the rule work, and then study the numbers. So you actually have to do all 3 of those. And you can do all 3 of those independently and see how they feel. All right. Yep. And this is what I mean. You get short here, use the PSAR, and you might get out here on that much risk, and you get 1, 2, 3R. Done. This is Nolan. And we're looking at the Aussie US dollar on the fives. Quick scratch. This should be a stop and reverse. And cover there on a 1, 2, 3. And then your short could be either here or there. I accept either one of those. You get paid nicely. Here is your SSC, which 1, 2, 3 exit. Get paid. Get paid. Well, I want to come back and get paid. The Dragon Axe is your big buffer. Get used to getting paid. And then there's your C. There is a RLXD. That's not a CD. It is a PSAR flip. The CD doesn't happen until down here. That's a Kata 2 entry, and that's the one we love. This is reasonable, good scratch, and there is an SSC all day. All three patterns. And then there is a Kata 2 to the downside all day. This could have been +5. CD, perfect. You got paid here, get short again and get paid again. The SSC would be here. That's still pretty close. This is a good quick scratch. You could have gotten short here. You elected not to. You could have gotten short here. You did get short here. Good scratch. Good short. Micro loss. And then smash this. And then exit. And then smash that. And then smash this. And there's our second entry. This could have been +10 for the day, to be honest. Trade at smaller risk. Take the signals. Trust your PSAR. Look at that. I mean, trust the PSAR. You will hear the experienced traders in here saying if there's just one thing they would do, it would be trust the PSAR. And that flip, lordy. That's all the framing you need to do. Woj PSAR flip. Oh, okay, I'm sorry. Gap down. He gets long here, gets paid. When this rejects and rolls over, yeah, I get waiting for this, but man, I like to get short here. Short, excellent. Second position. And then this one came up. You got to have that set as a quick exit so you don't lose half. Because you lost half on 2 positions. Beauty. Nice recovery. Where's my re-entry here? And then I can re-enter here and here and here. Stop taking breaks. Build your cardio. Still 3.7 and 0.6. XRP got shuttled to the side because you were making bank, but you got paid, got paid, got paid. Micro loss. This one should have paid for that one. You got out too late. Still, we'll take a 5-hour week. One good day made your week. And Arch. Let's see where we're at here. PSAR flip. I like this. Okay. Oh. frame faster. I like the short and scratch. I'd like that long because you'd probably get paid in here. Uh, and we got chopped around and got paid. Now on this one, to pay for all that choppiness, you need to take advantage of this. So there were some couple opportunities in there to get better. Good work by the team. All right, let's get the weekend report up. Finish her off here. Still woefully painful. Bearish volatile is everything you need to know. Even though ILF got a little better, uh, and the volatility gave a little hint of upside. That's why I would not be surprised to see a sharp upward move again on Monday, just like we saw Thursday. So replay those 2 days in the market to see just how schizophrenic and manic depressive this market is. That's the best thing we could say. Our friend, the RLFF, that was the previous excursion. It is through that and pointing down. And we are in the spring, but it won't take much more downward pressure for this to roll over. And then a winter, spring, winter is instant short and smash it to the downside. So this is a perfect critical state. Perfect critical state in here, ready to go back to the 270 or ready to collapse further. The last time it was in this kind of position was right here, smashed. And then here, smashed. All right, let's go to the ETF2. Only Latin America is above its 4-month moving average. Diamonds had the only stability. Only one ETF is above zero on the blend. But look at those. Look at that performance. Oy, oy, oy. And the difference between flat and minus 16% is why swing trading makes sense, because you get such a differentiation between different elements of the market. We saw staples and diamonds and healthcare showed a little bit of resilience this week, not much. There's something powerful and simple about that 4-month moving average signal. Just telling you. Nothing to choose from in here. Even the energy and Latin Americans got murdered. So the good news is those are tradable in either direction. So things at the top are in critical states, and they could continue, but they can also get smashed. So you get large moves at the extreme. So these guys at the very top and these guys at the very bottom are the ones where we'd expect most volatility. And look at China. Oy, oy, oy. In the Dow, there was some strength in healthcare for sure. And that leads you to XLV. Finance, it was JP Morgan. McDonald's trying to hold up the team. 3M and Walgreens. Walgreens finally coming out of that funk. So there's some pockets of gains, but you got to get a bird in the hand on those. You can't bet them for the long run. Take a quick look at U.S. is still doing much better than the rest of the world. Energy has been the only hope, although XLV was showing some potential this week. And I'd bet on that more than energy, to be honest. Blended commodities because of the energy. But treasuries getting smoked, real estate smoked, no safe havens. The typical defensive sectors are getting slaughtered just like everything else. So all the standard rules of diversification and uncorrelation, not true. ETF2, there's your Brazil. Otherwise, energy, banks. The most liquids, based on average daily dollar volume plus ATR percentage, these are the exceptional ones. Energy, biotech, semiconductors. Man, look at that. Almost 5%. Oil exploration, gold miners. This right here in semiconductors, that's why we're looking at Texas Instruments, NVIDIA, Intel. I should probably add applied materials to that too. And even advanced micro devices if we wanted to get further into it. Going to the daily, and we've seen those already. Dashboard 2 for the Dow Tactical. Only Tesla on the auto framer, and because it got smashed on all of the look back periods. Real weakness in Alcoa too, as we saw earlier from the metals. ETFs, weakness in silver, a handful of auto framers. Healthcare is the intriguing one to me right now. Auto framers, I really am just looking for the ones that have gotten hammered the most. Real estate, treasuries, Tesla, tech, Brazil. All very, very tradable, all very volatile. That's a trader's market. Nothing on the squeeze because of the enormous range from today. Godzilla's galore in the S&P 500. I prefer all the ones that are double green because they're moving large. I like the ones that are all one-day large. There's Tesla, Ethereum, and treasuries. The one-day large movers, there's almost a 9 sigma move, a 5 sigma move, a bunch in the 4s. That's how big today was. This is interesting. When it was quiet, but is now starting to get large on the movement. That's one coming out of the slumber. And then on the most volatiles, I obviously like the things that are double green, all the way down. Sniper auto framer for those of you looking for mechanical trading. And the tactical symbol set with the sniper stats in here sorted by the 5-day. I like these two here because they are double green and ready to go, but especially Texas Instruments because semiconductors have been getting smashed. More trouble on the NDXs. Only healthcare showed anything like strength today. This is what we talked about yesterday. Beware the dead cat bounce and the harsh reversal. And if that gets worse, this could be terrible. And we said that's evidence of a critical state, a large distance away from the long-term average in the zero line. So this is still very, very vulnerable. All right, that's everything we got for today. Remember, tomorrow night, swing trade framing with Ken H. and commentary. And we shall see you tomorrow.